Brian, I've noticed that FHA rates lately often are lower than conventional rates. Why would that be? And if that's usually the case, why wouldn't everybody just use an FHA loan?
So FHA and VA are government loans. Fannie and Freddie are technically government as well. They're just a different securitization for them. So what you run into is FHA and VA can tend to have slightly lower rates than conventional. A lot of that is because Fannie and Freddie have different credit score requirements to get the top tier rate. And with government loans, you don't have that as much. One thing you run into, though, is you could have a lower rate on an FHA loan, for example, but the savings you would see gets wiped out a little bit by the mortgage insurance. Their mortgage insurance tends to be a little bit higher than a conventional loan. Plus, they have an upfront mortgage insurance, which is 1.75% of the loan amount. And that gets rolled into the loan typically. So a lot of consumers don't even realize they're paying that percentage because it's just kind of glossed over. But it is an expense. It's part of their cost to borrowing, doing an FHA loan. And then with VA, you have your VA funding fee. So you don't have any mortgage insurance. You can do typically up to 100% financing. Some veterans will be exempt from the funding fee just because they may have if they have more than a 10% disability from military service, they're exempt from that. That's where VA can be very beneficial for them if they're looking to put little money down. If you're putting down a larger amount, sometimes a conventional loan can be better. So it just kind of, every situation can be a little bit different. But on your side, when you have a buyer come in that's maybe VA or FHA compared to conventional, what are some of the things that you see to help make them competitive?
The first thing I look at is their down payment. And I ask whether they've spoken to a lender like you, because if they have a decent down payment, even as low as 5%, but definitely 10% or 20%, it's not always the right answer for them to go FHA or VA because of that hidden cost of the funding fee that you're talking about. It is a significant fee that is hidden because it gets rolled into the loan. So people don't feel it in their payments so much, and they don't feel it out of pocket at closing, but it's there. And it's hurting their long-term wealth. So often people will switch to conventional once they understand those costs.